Welcome back, everyone. So I wanted to start today's episode by saying sorry I disappeared for a week or so there. I had to go on a work trip, and then immediately following that trip, I had family in town. So it's been a little bit chaotic around here, as you can imagine. But I do want to say that there was a day while I was in the hotel, and I hadn't checked my portfolio for a while, so I opened up M1 Finance, and I realized that we're in the red. Now, if you've been following this channel, you know that I'm not really concerned about the wins or losses, but that's to some degree. And we were down a couple of points, so it was enough to get me reading, okay? Now, I hop on my favorite finance websites, YouTube, Twitter, and everything just seemed to be so negative. So I wanted to go on Twitter and get people's reactions, go on YouTube, get people's reactions, and people seemed tiresome with the market, and some people were surprised. So I thought maybe investors could use something right now where it's more of a set it and forget it type style. So today, I'll be giving you my favorite ETF that pays dividends, and you can literally just set it and forget it. You can add monthly, weekly, whatever you want to do, daily, just set it and forget it. Alright, so let's start off with the portfolio update, and this will give you a little bit of insight as to why I'm doing today's episode. So we're currently sitting at 811, and we've got a return, a negative return of 5.4%. We've lost almost $25, and truly we've lost $28 without dividends, because we've got $3 in dividends here. So imagine if you had $100,000 or $1 million in a portfolio. 5% is a decent amount to be losing, especially, look at this. These are all in the red. If I didn't have Chevron or Costco, I'd truly be screwed. But ever since I I'm doing dividend growth investing, so I'm really not that concerned because I'm picking great companies. Now keep that in mind as we go through today's episode. So let's go to the quote of the day, which says, "It's not what have you done for me lately, but what have you done for me formerly." So keep that in mind as we're going through today's episode. So I said in the beginning of the episode that I went to my favorite websites, Twitter, YouTube, just to gather some information, and here's some opinions. So a lot of the time, people use this meter here, which is which emotion is driving the market right now. And they think fear is driving the market. And I kind of got that sentiment a little bit, especially on Twitter, that people they're just fed up with the economy, they're tired of it, and they want more good news. Well, that's not always the case, and we have to keep it realistic. So for those people, I think there is something perfect out there for you where it's just set it and forget it, and you don't even have to worry. And I think that's VOO. Okay, now if you don't know what VOO is an ETF that tracks the S&P 500 index, which represents the largest 500 United States companies. Okay? I think this is an ETF where you can literally just have this solely in your portfolio and do very well. So we're on the Vanguard website and we're looking at their total returns. And the total return, the average since inception for VOO is 13.71. That's fantastic, guys. If I got 13.71 return over a 10-year period, I'm ecstatic about it. So I want to go over, and here's something too, right here, is that its dividend yield is 1.58%. So you're still getting a good dividend yield, and it's currently trading at a good PE ratio. So I love VOO. I've always invested in VOO. But what I find interesting is that if you start with $1,000 with VOO, here's where it really comes in, where you have that set it and forget it. If you start with $1,000 and you have $100 invested per month, and you give it, let's say, 10 years, you have almost $30,000. Now, if you ramp that up, like what we do on this channel, we invest $30 a day. So if you just do $300 a month, over a 10-year period, you're getting $80,000, okay? Over a 20-year period, you're going to get $390,000. So if you're a 18-year-old fresh out of high school and you just have $300 invested in this monthly, by the time you're 38, you're going to have $390,000. And people think, oh, it's too late for me to start investing. Guys, if you're 40 years old, 20 years, $300 a month, you have $390,000 by the time you're 60. Same thing for a 50-year-old. By the time you're 70, you can have $390,000. But for those people who are young, really, this is where compounding kicks in. If you 30 years, okay, you have $1.6 million. So if you're 18-year-olds, okay, you give it 30 years. By the time you're 48, you have $1.6 million. I love VU. Always a good time to invest, and it's always a good time to invest in VU because you go over and you look, 13.71% return on average since. I know that it's only 13 years of data get to gather, but still, that's a really, really good return. And now, if we go back to the quote of the day, what have you for me? Let's go over here. We're going to take a peek at VU. Okay, I just want to show you what it looks like on a graph, on a chart here. It's always going up because this is the S&P 500, guys. You have a couple of dips, but let's say you started 10 years ago in 2013, you were all the way down here, and you never looked at anything else, and you just ended up right here where we're at today, 396. If you started in 2013, let's call it 128, you'd be at 396. So guys, this is a fantastic ETF. I have a friend, let me tell you a story here, okay? I have a friend who, when I initially started investing about 10 years ago, what he said to me was, man, the number one thing that you want to invest in is VU. And I laughed and I said, oh no, I'm just going to pick a couple of stocks. And then 5 years after, so about 5 years ago, I say, hey man, are you still invested in VU? He said, yeah, it's got quite the return. If you go over here and you look, okay, just about 2018, it was at 255. But I asked him in 2013, so he had made quite the profit. And then about a year and a half ago, I contacted him again and I said, hey man, you still invested in VU? He said, man, I'm 80% VU and I'm 20% Tesla. And he's making an absolute killing. I've seen his portfolio. He makes an absolute killing just off those two stocks alone. So I think that if you have VU, and back to the quote where it's not what have you done for me lately. Everyone says, what have you done for me lately? It's what you've done for me in the past, because that's what we call a track record. And VU has a great track record. I want to be involved with the great companies like Apple, Amazon. I want to be involved with great companies like that. All those top companies that are in the S&P 500. I know right now, today, it's basically 7 companies carrying the whole market, but that's just something you have to put up with it. And you go over and you look at them, you know, today it gets choppy past 5 days. It's been going down, but that's the S&P 500. It's tracking the S&P 500. So if you think that the S&P 500 will rebound, which here's a reality check, it's going to, I think this is the perfect ETF to set it and forget it. So if you have any questions, guys, just pin them down in the comments, and thanks for watching.